Well, everyone, in one of my last videos, I said that Cathie Wood would be updating her price target in the next few weeks. Well, instead of the next few weeks, it ended up actually being just a few days, and it is a huge price increase from the previous target that she had on Tesla. What is this price target? Why is Cathie Wood so sure that it will hit this target? And what as we should investors be doing? Let's go over that right now. Cathie Wood's new price target for Tesla by 2025 is $3,000 a share. Yes, $3,000. And that is just as a base case, meaning that this price to ARK has the highest probability of happening. That would impute a 347% return in the next 4 years, which annualized is around 45% a year, which is just insane considering that the S&P 500 on average returns about 7 to 10% a year. Even on her bear case, so if a lot of things go wrong for Tesla, she still imputes a $1,500 price target, which would still be a double up from what the price is today. Now, if this was any other fund manager, she most likely would probably just be laughed out of the room. But seeing as Cathie Wood is now one of the most successful fund managers in recent times, many people are beginning to listen.
I think when I thought of this initially, I don't think there's a fund manager in this country, that could get away with this kind of thing. Other than Cathie Wood. And I say that because if it were a brokerage house that came out and said this, David, we would dismiss it so quickly as being hype. But Cathie Wood actually is so good that you start thinking, okay, well, what is Elon Musk going to do? I mean, maybe he's got a lot in mind that she's thought about. I always know that Elon Musk wants to reinvent the entire grid.
Right. To get to this price target, ARK ran over 40,000 possible simulations, which had about 34 different inputs. Basically, they ran a bunch of different tests, put it into a computer, and an algorithm spit out a price target for them. But another key here is that her bull case is even greater at $4,000 a share. Now, that's only at a 25% chance of happening, but still pretty incredible to say the least. Let's take a look at some of the estimates that they put forth and some of the key points that they think are important for this price target and for Tesla's future. Okay, so on the left is today's numbers, and then moving to the right of the chart, we see a bear case and a bull case. First, as we can see, Cathie Wood is predicting at a minimum that Tesla will be able to produce 5 million cars per year. On the high end, about 10 million cars per year. So either a 10x or 20x of what they are currently producing. Now, many people may be thinking that this is a bit nuts, but with the two current factories in Fremont, California and Shanghai, they are already able to produce 500,000 cars a year, with two other factories already in the works simultaneously. One is in Berlin, which will start production in the second half of this year, and a second location in Texas that is set to be ready as early as next year. So in just a year's time span, we will see their production capacity physically double. And that's without creating any other factories, which they have the money to do and can easily achieve. They already can scale at will if they would like. Really, the only limiting factors are battery cells, but if they are able to solve that, it will be off to the races for Tesla. So these numbers are pretty reasonable in my eyes. A second thing that caught my eye was the increase in gross margin. As of today, that sits around 21%. However, as Tesla continues to become more efficient and continues to drive down the price of production, as we can see in both cases, they are assuming that the price per vehicle will be dropped pretty substantially. Now, this margin will continue to increase, which of course will just give them more free cash to invest in growth, such as better batteries or more manufacturing facilities. If we scroll further down on their analysis, we can see another key point here of the percentage of people on the autonomous platform. As we can see in the bear case, she is assuming that Tesla does not get autonomous correct by 2025 and that 60% of Teslas will be on it in her bull case. If you have seen some of the Tesla autonomous vehicle videos, you can see that they are truly on the cusp of something great and can very well solve this problem within the next 5 years. And if they are able to solve it, this opens up so many doors for them for things like robotaxi, which could just be another huge revenue stream for Tesla very soon. By getting autonomous correct, this would drastically decrease costs and once again increase their margins, but autonomous also allows them to get into another business model that I don't see a lot of people talking about at all, which is insurance. As of right now, Tesla insurance is only offered to owners in California, but this is a massive opportunity for Tesla to drastically lower insurance premium costs, undercutting the competition drastically with the detailed data that Tesla will have on people's driving patterns. And getting autonomous right would lower total accidents, which would lower premiums, as the cost of premiums are really just based off of a percentage chance that an accident will occur. In the new Tesla price target, ARK states that, quote, Tesla could achieve better than average margins on insurance thanks to the highly detailed driving data it collects from customer vehicles. And that, quote, in the next few years, Tesla could roll out its insurance offering to more states, underwriting its own insurance policies. Because its vehicles have better than average safety profiles, Tesla should be able to use real-time data to offer insurance in its vehicles, bringing pricing down dramatically, dynamically, lowering customer acquisition costs, and increasing margins. Basically, ARK believes that since Tesla will own the customer at the beginning of the life cycle, they will be able to easily lower premiums for drivers thanks to data and autonomous. In their bear case, ARK believes this revenue stream could be upwards of $23 billion by 2025. I think that this is actually pretty reasonable because if you take a look at what Tesla insurance offers, it really makes it a no-brainer for new owners. So only a 40% adoption rate, which is what ARK is predicting, seems actually pretty low in my mind. One of the final points that ARK touched on was fully autonomous ride hailing, which to ARK, if successful, will make up the majority of Tesla's market cap by 2025. Their assumption has increased to about 50% from 30% that Tesla will deliver fully autonomous driving in the next 4 years. This is all thanks to neural networks solving complex problems that before were seen as unsolvable. Quote, ARK estimates that Tesla vehicle fleets give it access to 30 to 40 million miles of data per day, up from 20 million per day last year. If successful, Tesla could scale its robotaxi service rapidly, allocating the additional cash in turn to manufacturing capacity, servicing its autonomous network. If 60% of its vehicles equipped with autopilot were to serve as robotaxis, Tesla could generate an additional $160 billion in EBITDA in 2025. So, as you can see, a majority of their revenue and profit would be coming from this. However, with autonomous and the ability to scale production with the increased cash, this will greatly increase Tesla's chance of achieving these numbers and really put out a lot of pressure to companies like Uber as well as Lyft because of offering a superior product. One last thing that I did want to mention, which is pretty incredible, is that this new price target from ARK Invest is solely based on vehicles, meaning this isn't even taking into consideration things like energy storage, solar, or any appreciation in the price of Bitcoin, which Tesla heavily invested into recently. So, in my opinion, after reading through Cathie Wood's assumptions and price targets, here are my final thoughts. Personally, I feel as though many of these assumptions are not outlandish or crazy at all. With production quickly ramping up, this will automatically increase Tesla's valuation strictly off of new car sales. But for the price of the stock to continue to rise at the rates that Cathie is predicting, autonomy needs to become more of a guarantee. And from videos that are out there, things that Elon has said himself, as well as doing my own research, I don't feel as though we are that far away from autonomous vehicles being a thing. But will it be adopted by the masses quickly? That will be the real test. If autonomy comes to fruition and is adopted, the possibilities for Tesla are truly endless and very well could achieve these price targets. I really want to thank you all so much for joining me today. If you enjoyed this video and got any value out of it at all, please drop a like on the video and subscribe for more content. Once again, thank you so much, and I will see you in the next video.